Well, 2018 promises to be a very exciting year for Philippine equities. This is a year that will be highlighted by the impacts of the passage of our tax reform plan. It will be boosted by a stronger infrastructure building program, which we expect to kick off in a big way this year. We expect foreign investors to continue to invest in the Philippines as they've been passive over the last couple of years, and we expect increased activity from the foreign investors. And we also expect the local investor to continue to support the market as they've done over the last 2 or 3 years. Participation from local investors has increased significantly. This is due to a bit of a wealth effect that's been created, and we expect that to continue. Tax reform has pluses and minuses. On the plus side, we expect government to raise significant amount of revenue. This will allow them to begin what is expected to be the largest infrastructure building program the Philippines has ever seen. We also expect consumers that have been impacted positively by tax reform to spend more. Anywhere between 8 and 13 million people will be receiving tax breaks, significant tax breaks that will boost consumption in an already strong consumer economy in the Philippines. The negative is it could introduce some inflation. Inflation has been benign over the last few years, hovering right around the 3% range, and we expect that this inflation number could jump close to 4% or near the higher end of the goalpost that the Central Bank of the Philippines is looking at to maintain the rate levels. So we do expect, though, that the positives will significantly outweigh this negative over the long run. We think there are 3 very important sectors that will benefit from the current environment we're in. We think the banking sector, the property sector, and infrastructure sector are 3 key areas for growth this year. The banks are poised to make record profits on the back of higher lending, higher net interest margins, and more inclusion. The property sector is poised to make record profits as well on the back of more sales with high demand, particularly in areas outside of the National Capital Region, and the excitement being built around the infra program that's coming through and many of the projects that surround the infrastructure that is on its way. Finally, the infrastructure companies that are involved in building, constructing, or supplying materials to many of these projects will be a big beneficiary of the national infrastructure program about to kick off. Well, we think certainly equities should be part of your portfolio, and we believe a balanced approach is the way to attack this idea. We also think, though, that because of the massive infrastructure program, there will be some pressure on the currency, and we expect the Philippine peso to depreciate next year. Not significantly, but maybe to the 52 to 53 peso to the dollar range. So we also advise some foreign currency exposure in your portfolios. Specifically for retail investors, we think using funds is the way to go. We think a balanced approach is the right approach, which means 50% of your portfolio should be in equities and 50% in fixed income. We would suggest 3 funds from the ATRAM family of funds. First, we think 50% of your portfolio should be invested in our Philippine Balanced Fund. It's among the best performing balanced funds in the country today and has a very long track record. Second, we think the Alpha Opportunity Fund will provide you that extra kicker in equities. It's a fund invested in small and mid-cap stocks and will give you exposure outside of what traditional index stocks give you. Thirdly, I suggest 25% of your portfolio is invested in our Total Return Dollar Bond Fund. This is a fixed income fund that gives you fixed returns in dollars and will provide a hedge versus any possible depreciation in the peso this year. So let me repeat that for you. 50% in our Philippine Balance Fund, 25% in our Alpha Opportunity Fund, and 25% in the Total Return Dollar Bond Fund. That gives you a portfolio of balanced equity and fixed income, together with a hedge, possibly to help against any peso depreciation this year. Well, we expect Philippine equities to continue to deliver good returns this year. Last year, Philippine equities gave 25% returns, and we expect somewhere around 15% returns for Philippine equities this year. There is upside risk to that number should we be able to deliver on the earnings expectations this year and kick off this national infrastructure program as expected. In 2018, we expect the Package 2 of tax reform to be put through to Congress and Senate. This is a very exciting package for us, and specifically for the stock market, because it has direct impact on valuations. The main component of this package is to reduce corporate income tax from the current 30% to 25%. And this will have significant impact on valuations for the stock market and for earnings growth for the stock market over the short term. We're still very optimistic and constructive about growth in the world economies. Developed markets are starting to grow at a much faster pace than we've seen over the last few years, and emerging markets are delivering earnings growth also quicker than we've seen over the last few years. And this is a very positive sign. We're seeing equity markets move higher last year, seeing some markets at record levels, and we expect this to continue. Currently, we favor equities over fixed income. We think global growth and earnings growth is a major theme, and it will play out in developed markets and emerging markets. We have a bias towards emerging markets and Asian equities at this time. In the fixed income space, we're less bullish. We see interest rates moving higher, and this may have an impact on your returns in fixed income. So under the current scenario, we recommend an overweight in equities and an underweight in fixed income. As far as currencies are concerned, we think the peso will depreciate versus the US dollar this year. Not significantly, but maybe to the 52 or 53 level to the US dollar. To take advantage of this global opportunities, ATRAM has its feeder fund program. These funds have exposure in global fixed income and global equities, emerging market fixed income and emerging market equities, and Asian equities as well. These are fantastic opportunities that investors in the Philippines today can access through our ATRAM feeder funds. Oil has been a tricky commodity lately. The price per barrel was $100 or around $100 a barrel a few years ago and dropped to as low as $20 just a couple of years ago. Today, the price of oil has risen back close to $70 a barrel. This is fair for the Philippines. We think it will not impact or have a significant impact on inflation at current levels and will not hurt industries such as the airlines and transport industries should it stay at these levels.